Yeah, today we're going to see about difference between auditing and accounting, and followed by that, the next topic is objects of auditing. First, we're going to see about difference between auditing versus accounting. First, we see one meaning accounting. Accounting means systematically keeping the records of accounts of an organization and preparing of the financial statement at the end of financial year. States it is a systematical records. We're going to record some financial statements such as balance sheet, P&L, etc., etc. Auditing means where we prepare some statement in accounting, right? We're going to check that if that auditing is correct, is everything is done in correct manner or not. It is accounting. Auditing is governed by accounting standard, whereas auditing is governed by standard of audit. Auditing is performed by accountant who is appointed by company or an organization or firm, whereas auditor is an individual, is an independent unit. He is appointed by company or hired by a company to check his financial statement whether it is maintained in correct manner or wrong or any error has been occurred there in the financial statement. The purpose of accounting is to check the profitability and financial position of an organization, whereas purpose of auditing to reveal the fact exist in the financial statement if the organization had give the true and fair view of the business. Accounting starts and whereas bookkeeping is ends. Accounting starts from like journal, ledger, trial balance, and so on. And auditing is end of where the auditor checks everything which is given by the company. So period of accounting, it is just a continuous process, whereas auditing take place when once the accounting has been completed. So this is the basic difference between accounting and auditing. Next, we're going to see about objects of auditing. Objects of auditing is further divided into main objective, secondary objective. Secondary objective is further classified into errors and frauds and specific objective. Okay, first let me see about main objectives. According to section A, section 200A, that states the auditor should clearly state that the clearly state some reports on the financial statement which is submitted by organization of firm, like balance sheet, P&L. He want to give the fair and truth view should be made on the financial statement, and he should submit the report. This was stated under SA 200A. So this is main objective. Next, the secondary objective. Secondary objectives is further divides into errors and frauds. Errors is mistakes, right? Which is done unknowingly. It is known as error. Whereas fraud, it is also mistake which done non-knowing by knowing. It's error. It's mistake. We know that even though we will do that. That's fraud. So error is further classified into four types. They are errors of commission, errors of omission, errors of principal, and errors of compensating. Okay, let me see one by one. Errors of omission. Errors of omission referred, the error is one which they forgot to record the transaction entirely or partially. It is known as errors of omission. Whereas errors of commission is known as uh, the transaction has been recorded uh, wrongly. Yeah, the transaction has been entered wrongly in the book of entry, in the original book itself. That is known as errors of commission. Once again, I'll repeat that. When a transaction has been recorded but has been wrongly entered in the book of entered in the original books, it is known as errors of omission. These two, which is errors of omission and errors of commission, are come under clerical error, under the section of clerical error. Next, we're going to see about errors of principle. Errors of principle refers to the some errors which are being done in this principles of accounting itself. So like that, there are some accounting principles. So mistake done in that error principle itself. Uh, that's definition for that. Such error arises when the entries are not recorded in accounting to the fundamental principles of accountancy, that is known as errors of principle. Next, errors of compensation. Errors of compensation is one which counterbalance by other error. Okay, there is any value mistake by forgetting a zero, forgetting a zero in 2000. That's simple example for errors of compensation. And errors of duplication, this fourth one. And such error arises when one entry in book of original has been made twice or thrice has been posted. Yeah, the same error has been recorded once again. That is known as errors of duplication. Once again, I repeat that. Errors are classified errors. Okay, clerical error. Under the clerical error, there are two types: errors of commission and errors of omission. Okay, and errors of principle, errors of compensation, compensating error, and errors of duplication. Okay, whereas frauds, the next subheading is fraud. Yeah, first of all, I explained that what is fraud. Okay, we know that that is mistake, but even though we will do that, that's known as fraud. The errors or a mistake which is done by knowingly, it is known as fraud. Okay, fraud may occur in some situation. Let me see that. Okay, frauds. Uh, Embezzlement of cash, misappropriation of goods, fraudulent manipulation of accounts. These are some examples of frauds. Okay, embezzlement of cash. Like we will give an example for that. For example, we buy a product for 1,000 rupees, but we will ask the shopkeeper to make a bill for 1,500 or 1,100. So that's is an example for embezzlement of cash, misappropriation of goods. This is a basic thing that may happen in many organization, but like showing stock excess of stock or stock are less in this accounts. This is errors of misappropriation of goods, fraudulent manipulation of accounts. Like we show the profit less or profit more in balance sheet or P&L account to increase our company is generating more profit. We'll say like that, right? We need to show that company is generating more profit. So we will enter the profit as more. That's manipulation of accounts. This is a common. These are some examples. There are huge and lot of examples. This is some example which come under fraud. Okay. Next, specific objectives. Audit is not only will check the balance sheet or P&L which is maintained by us. It also encompass such other area like review of operation, performance of management performance, review of management policy, seeing the cost records and so on. These are come under specific objectives. Once again, I explain basically objects of audit is classified into three: main object, secondary object, and specific object. Here, the secondary object is classified into two types. One is errors and frauds. Errors are mistake done by unknowingly, whereas fraud are mistakes. Or mistake we know that, but even though we will do that, okay. And errors are further classified into errors of commission, omission, principal, compensating, errors of duplication. Okay, guys, these are the topics has been covered in this today's session. Thank you for your patient listening. Thank you.